Now, with these next 4 years, everyone should be trying to make as much money as they can. They should be tripping over money. They should be making boatloads of money now.
What's up, guys? It's the homie Big Vic. We are back in here with another video. Today, I have a super special guest friend. I got Dr. Janine Jennings. I like having friends that know their stuff, that know their business, and they also make money too. They understand money. Not only does she understand money, she is a tax professional. Without further ado, Dr. Janine, how are you?
I am magnificent. Thank you for having me on your show. I appreciate it.
I appreciate having you on here. So, what all do you do? Like currently, what do you do currently?
I am a tax professional. I've been in the accounting industry for 24 plus years, and I passionately help business owners save money on their taxes, help them calculate profit margins, and keep more money in their pocket by applying different strategies that they're able to take advantage of. And then if they
Awesome.
don't have retirement plans set up, I'm able to assist them in setting up simple retirement plans for the future, and calculating what a future looks like for many, because you're in the grind of things and you don't really realize, like, oh well, I will get older and I do have to kind of retire.
For
And
sure.
so a lot of people don't set that up, and they forget, and that's okay. And that's okay,
Right.
because I wrote a book about retirement that I can share the link to. Just getting started now. If you haven't started and you want to start now, it's okay. You can start now and still have a nice nest egg later.
Absolutely. Absolutely. By the end of this video, I will definitely have a link that you guys can download so you can get access to this book, and there will be some extra gems in there for some things that you may not know you could write off on your taxes, especially
Yes.
with all you guys that have brand new LLCs. So I'm excited. I'm excited.
I'm
So
a,
let's jump right into it. Let's jump right into it. My first question would be, there's a lot of new people that are watching this video that just got their LLCs up and running. Most
Mhm.
of them don't have credit lines established. They're going out, they're buying their truck, and they're spending a lot of money right now. What are some of the first ways that an LLC gets taxed? Because I know there's different levels of LLC. So let's jump into that.
First, you mentioned people first starting off, getting their
Mm-hmm.
LLCs. First
Mm-hmm.
thing you need to do to be LLC compliant, get a corporate records book. You can get that on
Mm.
Amazon. I'll make sure I include the link in the
Okay.
Drive for Wealth ebook that I'm giving to your viewers.
Okay.
And that's first thing. Second thing would be to make sure you keep the receipts that you're spending all this money. You have to keep all the receipts.
Okay.
And a simple way to do it is to get Ziploc bags and write in marker the month and the year, and then just put the receipts in the Ziploc bags, and then that way they stay
Mm.
protected. And you can get a banker's box on Amazon and just put them in the banker's box and just label the banker's box that tax year.
Okay.
I don't
Simple as
want to
that.
overwhelm it. Simple as that.
Simple as that.
Yeah, it doesn't have to. If you're more organized, then yes, do a more organized system. But if you haven't started, that's the way to start.
Awesome.
Yes. And then for the different LLCs, you have single member LLCs and you have partnerships.
Okay.
Single member LLCs are taxed as like a sole proprietor.
Okay.
Partnerships are taxed as partnerships, like depending on how many partners you have. If it's a quarter,
Mm-hmm.
you have 4 people, you're taxed in that way, 25%. If you're just half and half, 2 people, you're taxed the profits, 50% of the profits you're responsible for, and 50% of the profits the other person is
Partner.
responsible
Okay.
for.
Cool.
That is a different tax return, though, for partnership. It is a 1065 tax
Okay.
return for a partnership. And you all would get a K1 to put on each of you all's separate tax returns.
Okay. Well,
Unless you're married, you'll be
okay.
on the same tax return.
The S corp. I want to jump into that because that is for, like, when should someone go from just the either partnership LLC or single member LLC to going over to a S corp? Like, when do you feel like that's what position would a person need to be in before they decide to go S corp?
A person should switch to an S corp
Mm-hmm.
when they start profiting on their tax return at least 40,000 or more.
Okay. Okay.
Because
So
at
this is,
that point,
are you saying
go
this
ahead.
is if you're making above 40,000 in your LLC, this is when you should switch it over to an S corp?
Consistently, yes. Like
Okay,
first
consistently.
year, first year you've made 40,000
Okay.
as a net profit. Now we're capitalists. We live in a capitalist society,
Mm-hmm.
so you have to pay money on that 40,000. And if you're consistently doing that for 2 and 3 years, then you need to consider switching to an S corp because you're just paying a lot in self-employment tax at that point.
Okay.
And switching to an S corp helps you save on self-employment tax.
Okay.
And that's around $15,300 that you would be
Mm.
saving by switching to an S corp.
It's a lot of money. That's a
That's
lot.
a
That's a
lot of
good bit.
money.
Yeah,
That's
that's
a
a good
good
bit.
bit. Yes.
Mm-hmm.
And the government designed a self-employment tax to help entrepreneurs pay into their social security
Okay.
because there had to be a way for entrepreneurs or self-employed people to collect social security even though they weren't W2 employees.
Right.
So
Okay.
that's where the self-employment tax goes. It goes towards your social security,
Right.
because when you start to want to pull social security, you have to have 40 credits.
Mm.
A lot of people
40
don't know that.
credits. And that's
40 credits.
okay. Let's say you were previously employed before starting your LLC and
Hmm.
you had, I'm sure, credits. You had some type of credits going towards your Social Security as when you were working, prior
Yeah.
to starting an LLC. Just a regular LLC, single member, partnership,
Hmm.
there's nothing going towards Social Security in that type of setup, is what you're saying, right? Unless you have
No,
an S
no, there
corp.
is. No,
There, oh,
there
there
is.
is. There still is.
There is. That's
Okay.
what self-employment tax is.
Okay.
When you are an LLC on you pay self-employment tax because
Okay.
you're just single member.
And is that a higher rate? You said
It's the same rate depending
the same
on
rate.
how much it depends on how much your net profit is.
Okay, I got you.
If anybody needs clarification, you can just call and I can clarify it.
Okay,
But I hope I'm explaining it
for
correctly
sure. Oh,
to for people
I
to
got it.
understand.
I hope I'm picking up on it. So I hope everybody else is able to kind of pick up on it as we're going along. There's a lot of tax gurus on YouTube, right? I'm sure a lot of us watch YouTube University, right? For taxes. We're just getting different tips on taxes. Now, I've seen several people say that paying taxes, running an LLC is ghetto. In other words, you should have enough write-offs to where you're not coming out of your pocket every year. What's your what's your take on that? Because if you're making, let's say you're high six figures, is there a way to get around, or I guess with enough write-offs to get out of actually coming out of your pocket? Like, that's, yeah, I definitely need some clarity on that right there.
Okay. So if you're making six figures, if you're making six figures, remember we live in a capitalist society.
We do. We
So
do.
your write-off should substantially lower that six figure.
Right.
And so say you're 100,000, for example's
Mm-hmm.
sake. Say you have legitimately 55,000 in write-offs.
Mm-hmm.
So you're have a net profit of 45,000. Okay. So then you get to take off your standard deduction, which is 14,600. So you minus that from the 45,000 minus 14,600. So your net income is 30,400.
Okay.
So that puts you in a different tax bracket, a 10 to 12% tax bracket, and that's how you're taxed. So you have to pay
Okay.
tax on the 30,400. So which is, let's say it's 10%, that's $3,400 that you have to pay
Right.
taxes on.
Okay.
You're going to be responsible for something.
Right. For sure.
Unless you have children, you're able to get some tax credits that way, earn income credit and child tax credit.
Okay.
But if you're single and you're not claiming any kids, you're responsible for that $3,400 that's due.
Gotcha.
It's a way of life. You can't really too much avoid paying taxes on a LLC scale level. When you move to an S corp, you're able to avoid paying a lot more taxes than if you were just a regular LLC.
Gotcha. Please let me know if this is true, because if I have this question, I'm sure other people may have this question that are watching. Now, I've also heard that, guys, I've heard some people that have LLCs getting a return back. How does that happen if you've made multiple figures a year and then you actually get a tax return? Correct me if I'm wrong. Before you answer that, correct me if I'm wrong. But wouldn't that only exist if you've written off more than you actually made
Maybe.
in order to get a tax return back? Wouldn't that have to be the case?
No,
No?
no,
Okay. School me.
no.
Break it
Now
down
you
for me,
can't.
please.
So the IRS was created for you to owe them, for
Absolutely.
them
Absolutely.
not to pay us.
Correct.
They are the biggest collection agency in the
Oh
world.
my
Well, in
goodness.
the US, biggest. So they like to collect money. If a person made multiple figures, how they would get a
Mm-hmm.
refund is if they, one, paid estimated taxes. That's why it's great to have a tax plan in place at the beginning of the
Okay.
year so you can kind of estimate your income.
You mean like paying quarterly or no?
Paying quarterly
What?
estimated
Okay,
taxes.
that's the estimated. Okay, gotcha,
Yes.
gotcha.
And if by the time you've paid your estimated taxes, this is scenario one. You've
Okay.
paid your estimated taxes, and when it's time to file, after all of the deductions that you write off, write offs and deductions are the same word. They mean the same thing. They're two different words. They mean the same thing. After all of your write offs and your net income, you
Mm-hmm.
thought maybe you had a higher net income, but you
Mm-hmm.
paid way more into estimated taxes, you would get that money back. That's how you would get a
Mm.
refund.
Okay.
Yeah.
And that's only if you're doing it quarterly, because if you're doing it yearly, you have no way of knowing. You wouldn't have paid anything into it because you're paying it yearly, because you're
Right.
just doing it at the end of the
Right.
year versus quarterly. Okay.
Right.
Okay.
Right. And then the second scenario is if by the time you've made your multiple figures, six figures, and
Mm-hmm.
you wrote off everything that you can write off, and then your net income, you either are married and you have some not refundable credits, meaning you
Mm-hmm.
get the earned income credit or you're getting the child
Through a
tax credit.
spouse, or something like
Yes.
that. Okay.
That's how
Okay.
you would get a
Gotcha.
refund. That's the second
Gotcha.
scenario.
Now,
But if you don't have those two scenarios, you're definitely not getting it.
gotcha.
Unless
Gotcha.
there's some type of credit, maybe an R&D credit
Okay.
that you qualify for, or electrical vehicle credit that you qualify for, or maybe a fuel credit that you
Okay.
qualify for. Those
Okay.
credits would give you a refund. That's the third scenario.
Great answer, but I also have another great question since you mentioned the electric vehicles. So I purchased my electric vehicle. When I purchased it, they gave me these rebates off of the vehicle, tax credit off of the vehicle. I think I'm supposed to get that back on my taxes. Am I correct? Or
Yes, you are correct.
how does that work? I'm
Yes.
correct. Okay.
So when you file your taxes, you
Okay.
would file the electrical vehicle credit,
Okay.
and all you need is the VIN number and the date
Okay.
of purchase and the amount of
Okay.
purchase, and you would get
Okay.
a full credit.
A full
And
credit, just for the tax credit, not the full credit of what I paid for the vehicle. Please tell me that's not it. Just the credit, right? Because that's a
you're
whole
gonna
different
get the
number.
electrical vehicle credit, but you would
Right.
also, if you're purchasing or leasing, you also
Hmm.
get to depreciate that vehicle as well.
Okay.
So
Okay.
it's a twofold for that one, for that
Gotcha.
scenario.
Yeah, that makes sense. That makes sense. Now it does. It makes a lot more sense now. A lot of guys in this business right now, they're buying box trucks.
Mhm.
If this truck is weighing over 6,000 pounds, they get to write off that entire purchase, right? They can either
Absolutely.
split it up, or the purchase price of that vehicle per tax year, or they can write off the entire purchase. Correct?
Yes, that is correct. It would be wise to just write it off in in that year,
One tax
because
year.
most likely one tax year, because
Okay.
you most likely are going to get another truck or another some more equipment that's going to
Right.
equal the total of the truck. So you're going
Right.
to qualify for all of those
That write off.
deductions, right?
That
That write
deduction.
off.
Okay.
It's advantageous, especially if you're in the six figures, to write off the full
Hmm.
value. If the truck
For
is
sure.
50,000, 60,000.
You mentioned to me about the Augusta 14. Am I saying it right?
Augusta Rule, yes.
Augusta Rule. I don't think a lot of people know about that. Let's get into that Augusta Rule 14, because you dropped a gem on me with that one. I was like, whoa, I done missed that 3 years in a row. Like, yeah, let's get into that. Let's get into that. That's what happens when you want to
Okay.
do your own taxes. See? Uh-huh. You miss something. Miss something. All right. So let's talk about that Augusta Rule 14. Break that down for the people, because I'm sure a lot of people do not know about that, especially new LLCs.
Yes, the Augusta Rule was developed from a golfing outing, really, in Augusta, Georgia. Now,
Okay.
the Augusta Rule legitimately allows you to write off 14 days or less. Your business can rent from you
Okay.
and write off that meeting or gathering or accounting work that you do.
Mm-hmm.
And you don't have to pay taxes on that money. And that money, it's a minimum of 14,000 that you
Mm.
can write off. Like if you did 14 days at $1,000 a day,
Okay.
that's 14,000 you get to write off
Oh,
of
absolutely.
your return, especially
Okay.
for a single member LLC. That's huge.
That's a lot of money. It's
14,000.
good. That's a good.
That's a good amount of
That's a,
money.
that's good money you can keep in your pocket.
And you're supposed to charge yourself market rent for wherever you live in your city. So
Mm.
I'm in Cleveland, Ohio.
Okay.
Market rent now is between $1,200 and $1,500.
Okay.
So imagine $1,500 times 14 days. That's 21,000 I get to write
That's
off.
a bag. That's a bag. That's a bag I get to keep in
Yes,
my pocket.
in
Yes,
your whole pocket.
for
And I
sure.
do include that in the ebook that I made. And
Okay.
I include a sample of the receipt that you're supposed to keep, because
Mm,
receipts save your life. Keep all receipts that you get.
mm,
I don't care if you go to the corner store, dollar store, keep
mm-hmm.
that receipt. It protects you against the IRS if they say, no, we don't want to allow this deduction. And you say, no, here's the receipts for it. And then
Right.
they have to
Okay.
allow it.
Right.
It
Yeah.
protects
Because
you.
this is kind of like why I purchase a lot of things on my business credit card, right?
Hmm.
Because those bank statements are basically like my receipts of all my purchases. Business cards, that's what I'm swiping most of the times. Simply for that fact, because it's showing that the business has made these purchases versus
Hmm.
my personal account. Let's get into those deductions. Like what deductions can an LLC take as far as the write-offs go? Like what are some of the most common deductions that we can write off? Because we do diesel fuel.
Hmm.
How much of that fuel can we write off?
Right off all the fuel. That's
All
for
the
the
fuel?
truck.
All the diesel? Okay.
All the fuel. You
Okay.
can write off the fuel, car insurance, well, truck
Okay.
insurance,
The truck insurance, commercial. Yep.
repairs, car
Parking, of
insurance,
course, parking. Like if
parking,
you lodging, what they
tolls,
call it, lodging,
any meals
while operating, or
while operating.
just the
And if
full
you
the
took
full amount, right? Not like a
full
percentage,
amount,
just the full amount. Okay.
full amount, you
Okay.
can write that off. Also, if you are in a truck stop or at a restaurant and you bought somebody's meal that you were talking to,
Mm-hmm.
you can fully write that off. You would just have to put the name of the person that you were talking to on the
Okay.
receipt
Okay.
and what you were talking about. Either you can say just something simple: business growth, business strategy,
Okay.
um, a business scaling, business reference, a
Right.
referral, something of
Okay.
that nature, something simple to be able
Okay.
to write that off.
Yeah.
And that's a lot of,
Absolutely.
especially meals alone and
Yes.
repairs alone. You get to write
Hotels.
off your hotels, definitely.
Hotels. It's my favorite one. And I spend a lot of money on those.
And then you also, any subscriptions that you have, AAA,
Mm-hmm.
roadside assistance,
Mm-hmm.
um, that type of stuff to
Mm-hmm.
help you in your business, you get to write those off.
Yes.
If you pay for Pandora, you get to write that off while you're
Okay.
driving. If you pay for Hulu, Netflix, all of the streaming, you get to write that
Right.
off because that's
Conferences.
for your
So what about
conferences,
the trucking conferences that they have out there where we go in getting this education?
educational, anything educational, any
Okay.
conference that you can go to, I
Mm-hmm.
would go because you get to write it off fully.
The entire
Your
trip,
The
right,
entire
right
trip.
off.
Your tax
Okay.
preparation, you get to write that off. So if
Mm.
somebody's charging you $2,000 to do your taxes,
Mm-hmm.
go ahead and pay it. You get to write it off.
Mm.
It costs you nothing. Your
Yeah, see, I don't think a lot of
advertising,
people out all
no,
of that. Yeah, let's talk about it. Let's talk about it. Advertising. Yeah, if you
I'll go down the
advertise your
whole
business.
list.
Yeah, yeah, talk about
I'll go down your whole list. So you get to write off your t-shirts that you have made, your sweatshirts you have made.
it. Y'all see
It
that?
I don't wear anything without my business on it.
Okay.
Say you bought a Gucci shirt
Mm-hmm.
and I would put your business in small letters on it. You get to
Mm.
write it off.
Oh, y'all
If
heard
you
that?
have to have the Gucci shirt,
Right. Yeah,
if you have to have it,
if you have to
if you
have that.
have to have
If you
it.
have to have it. Go get your name,
Yes.
your company name embroidered on the shirt and let's write that
Yes.
off.
Let's write it off.
That's a
Might as
gem. That's a
well.
gem. Y'all caught that? That was a quick little nugget. Hit y'all with a nugget just now. The advertising, any marketing that you're doing for the
Any marketing,
business. Okay.
anything, any. Now this is another little tax loophole, a tax hack, if you will, is
Okay.
paying your children. If you pay your children, like we already ask them, we're buying them things like
For
they
sure.
have extracurricular activities. Now
Correct.
this is from 18 years and under.
Okay.
18 years and under. If you're paying for their tuition or anything of that nature, you want to pay them and put it in an account that you have
Okay.
established for them. And if you're asking them to, file paperwork, simple things, and you pay them a reasonable wage, whatever
Mm-hmm.
you feel that may be, don't go hand it to them directly. Put it in the account like you're paying them, and
Right.
then whatever they wanted, they can use that money from that account, and you can pay for the tuition, pay for the Jordans, pay for
Mm.
anything that they were asking for from that.
Right.
And then
Okay.
you just keep track of the amount that you are putting to that account and paying them,
Mm.
and you get to write that off up to the standard deduction, single standard deduction, which
Okay.
is about $14,600
Okay.
this year for 2024
For the year. Okay.
for the year.
Oh yeah. Yeah. That's
You
a
were
nice
we
little
already
that's a
spend
nugget.
more than right. We already
Oh, for
spend more than
sure.
fourteen
You might as
thousand
well get
on
some of that
kids.
back. You might as well get some of that back. Absolutely.
Yes,
Absolutely. Yeah, that makes sense. Yeah, so that's
and
a that's a
that will
that's a
be in the
sweet
ebook
deduction.
too. Yeah,
Okay.
that'll be in the
Yeah.
ebook.
Yeah. So if you don't know, you will know. By the end of the video, there will be a link for you guys to tap into, download that ebook. That way you can kind of have a nice little roadmap of things that you
Yes,
may not have remembered from watching the video that you could actually write off. So yeah, let's continue.
a key point to know is to make sure you kind of pre-plan your income for the year. Start
Mm-hmm.
jotting down how much you feel that you want to make. If it's $1 million, then let's calculate that and what that entails to you and what the tax implications looks like. You should
Right.
have an idea of how much you're going to make for the year.
Okay.
By now, just write it down. You don't have to figure out how you're going to make it, but at least that's what you know, that's what you want to make.
So technically, I'm just gonna throw something out there real quick. If let's say we generated $1 million this year, I'm gonna have deductions. But you didn't have deduction. You just made this all this money. Technically, 300,000 of that got to go over the IRS, right?
Yeah, 37%. Yes. So
37. So it's a little more than
37,
300,000. It's at
370.
370, 370,000.
Instantly to them.
Instantly, instantly. So if but here's the beauty in that. When you scale to that income level, which I'm sure you're not going to get there by yourself, you will possibly more than likely have some type of team around you that you're paying, and that's automatically going to be deductions. Even if you had payroll or whatever that picture looks like, when you get to that level, there's a team of people around you that you're paying. And those deductions should definitely be there to where you're not to where you shouldn't be nowhere near 370,000 given to the IRS.
No. So at that level, with this type of industry, generally your take home may be 120,000 after it's all said and done. And so
You mean like
then
as after you filed everything?
after you filed everything,
Okay.
paid everybody, and all of
Okay.
that, your tax implication should be where at that point you're investing into some retirement accounts.
Mm-hmm.
So that way all that money, you're not responsible for paying tax on all that money.
I'm glad you mentioned that because it just brought another question up to me. I spoke with the guy. Matter of fact, it was at the Funnel Hackers event we went to in Orlando. My Uber guy was a CPA. That's his main business, but he did Uber on the side.
All Maine
Go ahead.
people know the
Yeah.
value of doing Uber and having and collecting a 1099.
You hear that? So
don't think
check
your
this out.
people, CEOs do Uber.
Ain't that something? So listen to this. He mentioned about an IRA, but he didn't say the Roth IRA. I want to say he told me a self IRA.
So
Okay,
there's
let's break that down. Let's break that down for me.
There's 3 different IRAs. One is the traditional IRA, and which you put money in, but when you take out at 59 and a half, you're allowed to take out your withdrawals
without a
but
penalty.
Without a penalty, but you're taxed on that money.
Okay, right.
Now with a Roth IRA, that's the second one. You are all withdrawal age for the IRAs is 59 and a half, where you can start taking out money. Roth IRA right now, it's $8,000 a year you can put into it. And when you start to withdraw it, it's tax free. Now the SEP IRA is a one that's not really talked about a lot, but I talk about it in my book from Amazon. It's on Amazon. I talk about it and explain it in full detail, all 3 of them. The SEP IRA allows you to buy properties in that IRA. You can have multiple things, buy gold. You can buy silver in that IRA. But with a Roth and the traditional, you're just putting money in.
Right.
You can't have assets in the IRAs. But with the SEP IRA, you can.
Okay. And that one is that one is also, you're not taxed if you pull money, there's no penalty if you pull money out of that one. Okay.
Right.
Okay. At any time. You can pull money out at any time.
Yes.
Okay.
And you can contribute a lot more to a SEP IRA, which will reduce your taxable income. So if you're making $1 million, you're investing in definitely different retirement accounts and
for sure
different like whole life insurances to help offset that $1 million, so you don't have to pay a lot of tax on it.
Now I've heard of this concept. People watching YouTube University. There's a lot of gurus. It's a lot of gurus out here, right? And when you hear about the different entrepreneurs that will say, I made $1 million, but I also took that $1 million and I invested it back into more investments so that when tax time comes, my money is still out there working for me. So I made $1 million, but I took that $1 million and I put it back into investments. So they're not necessarily having to pay. Uh,
Taxes.
there you go. Is that correct? That
Yeah,
does that sound about right?
that sounds correct. There is a strategy for that,
Okay.
like that out there, where when you're making a lot of money, you
Mm-hmm.
return that money that you're making into the investment, so you're not taxed. Because
Right.
the government, they're capitalists. They want to tax us on everything that we do.
For the money that you're holding, well, the money that you try to hold on to, they want to tax you for that.
Right,
Mm.
right. It's not fair.
It's not. It's not. It's not. It's not. I believe in keeping your money working for you, investing into we call them multiple streams of income. But of course, that's after you have that main thing working. I want to clarify that. I'm not saying go get multiple things going on, trying to do everything all at one time. I mean, after you got your main thing popping off, and
Yeah.
you have that working for you and generating income for you, then take that capital that you build and start investing that into other money making endeavors. I hear of a lot of real estate guys doing this. They will
Uh-huh.
make X amount of dollars and they will go take that money and invest it in, keep investing it into more and more and more properties. Matter of fact, I heard Dame Dash say the same thing. Every time he makes his money, he puts it right back in to make more money. He didn't say he was broke, but he pretty much said like my money is in more investments, right? I made a
Right.
million, but I put it right back out there to
Right. So you
continue to
can live
keep
off
that
of.
money. Yeah, correct. What's your philosophy? Like, what's your take on that, like that strategy? Because I know there's several different strategies out there, but
My take on that is when you are making a lot of money, you need to stay small long enough and keep your expenses real low. That way you can live a modest lifestyle
mm-hmm,
until your investments start paying for a bigger lifestyle. What Dame was, pretty much saying is that he has, let's say, 200,000 that maybe he lives on or something.
okay,
Let's give it a number. Let's give it a number.
right,
And
right,
he doesn't go over that 200,000, so he stays within his means, and the rest of the
okay,
money that he makes, he invests it for retirement. Because it's like, what do you want? How do you want to live at retirement? What age do you want to retire? Like,
right,
what does that look like to you? He's figured that out, and that's why
okay,
he's able to do that. When you have a tax plan, tax strategy, you're able to figure that stuff out and move within, like 5 year increments. Like, okay, so for the next 5 years, this is what we're doing, and this
okay,
is how much money I should have. I mean, you're going to break it down. Like this year, right now, you should be planning for 2026.
for sure.
The goal is to pay less in taxes, period.
Okay.
Because taxes are the biggest expense you will ever pay in your life.
Absolutely. Especially if you plan on living a long time. Taxes come
Yes.
every single year. So that's a fact. I would rather be in no other field of being in business for myself. When you're working a job, there is no tax advantages. You don't really have no real tax advantages. And now I think they're taking a lot of the benefits you used to get. I think they're
You don't
taking a
even
lot
get
of that
them.
stuff away. You don't get them anymore.
Right.
Right. So it just makes more, it makes, listen, it makes more sense now than ever to be in business for yourself. Like it's the way the system is set up now. You literally have to be in business for yourself to make some type of a decent income,
Right.
right? Unless you have one of these big corporate jobs, uh, six figure, but six figures is not what
Right.
it used to be anyway these days, especially if you
No.
have a, a job. Like at the end of the year, six figures is really not six figures.
I would
You
like to
have
say
to
that there
go
are
ahead.
two
Let's jump into
tax
it.
systems. There's a tax system for W 2 employees, and then there's a
Okay.
tax system for self employed business owners.
Mm,
The most lucrative is the self employed business owners because
okay.
you get to keep more money in your
Mm-hmm.
pockets. And
Mm-hmm.
that's why you will see every celebrity, big wig, they have something additional that they're doing, because when you make a lot of money, you're taxed at a higher rate. And
Mm-hmm.
they're trying not to be taxed so much on their money
Mm-hmm.
that they're making. So
So they
it's
keep
best
something. They
to,
have something else going on.
yes, they always have something else going on. Like you said, a CPA was driving Uber. He knows the
Mm-hmm.
value of having something else going on.
Absolutely. Absolutely. It was a Asian guy, and he was like, "Yeah, I'm a CPA." He said, "Whatever." He said, "Whatever you do with the money that you're making right now, make sure you get you set up." I thought he said self, but he said SEP IRA.
Yeah, SEP. It's a SEP.
Okay. See, I thought he said self IRA, so it's a SEP IRA. Okay. I was like, wait, I could put that much in there because I've always known the traditional IRAs. I heard of the Roth. That's the main one I heard of. Putting money in there, and you can't touch it for X amount of years once it goes in there without
Mhm.
facing some type of penalty if you try to pull funds from it.
You can
Yeah,
pull
but
funds from it on an emergency basis.
okay,
I like to set up a Roth IRA on Acorns because if need
okay,
be, if you need to pull that money out that you've saved, you can transfer
mm-hmm,
just to your bank account easily and it's
mm-hmm,
in the bank account in a day or two. If you set this up on Vanguard or Fidelity, which are brokerage platforms,
mm-hmm,
they might give you a little
push back.
has pushback on trying to
Okay,
withdraw it. But with Acorns, it's easy to just you need it, you got it, you paid
nobody,
10%
no
or 20,
hassles.
no hassle, 20% penalty on it. And that's due at tax time. You'll get a 1099. I like to have access to my money if need be. You never know what the emergency
Absolutely.
might.
Absolutely, at all times.
I'm
That's how
sure the
I am. Like,
people, yeah, and in the fires that in California, they needed access to their money right then and there.
the world gets more and more real the older you get, and you start saying, okay, if I were to stop working, what do I have? Like, what am I able to look back at? The earlier you can start setting yourself up, the better it will be for you in your future.
Right,
And
right.
I feel like we live in a time now, like right now, I feel like we live in the most incredible time right now.
Yes.
This is one of the most incredible times right now. Like
Yeah.
to me, it's just like we really can go out here and literally write your own ticket these days, right?
Right.
And if you understand taxes and tax breaks and you really get into that, you can absolutely use it to your advantage,
Yes.
right? And so that's the entire reason I wanted to bring you on the channel and talk to the audience because it's just benefits in running your own company. So many benefits.
Yes.
So,
It's a lot of risk
mhm,
and it's a greater reward. Running your own business, you make a lot of mistakes, but you also learn from them too.
mhm,
And if you are in love with just people and servicing people and helping and having a purpose, you can write your own ticket and live a great life and pass that down to your family and teach your kids or nieces or nephews if you don't have any or cousins how it is to run a great business, be a great person, do great things
mhm,
and have fun while doing it. Now with these next 4 years, everyone should be trying to make as much money as they can. They should be tripping over money. They should be making boatloads of money now.
mhm.
Is the greatest time to make a lot of money. And I believe that we are going to be allowed to make a lot of money with no hassle.
What's the reasoning behind that? With that you believe?
Because of who is in office
Mhm.
and they are business people and they cater to business people. They are going to have a lot of tax breaks for the wealthy.
For business owners, for sure. The
For
people that
business,
make a
yes,
lot of money, for sure,
yes, definitely.
for sure.
So
Like
now,
it's
while we have the tax breaks, we should utilize them.
absolutely got to take advantage of them. Like
Yeah.
you said, that was the best time to make as much money as you possibly can make.
A few things that you can start if you don't know where you're going after this YouTube video. First things you can first do, go to Social Security, ssa.gov, and just take a peek and see what you will collect at 65, 67. See how many
Mm,
credits you have. That's first things.
I've never
Just
done
go.
that before.
You never done?
you just gave, you just told me I'm doing that as soon as we get off this. As soon as we get off, I'm going right there. How much I got in this little account? Let me see who we looking like.
Right.
Oh, for sure. I'm going there. I'm I'll be the first one.
Yes.
I've never done that before. Matt,
Really?
I think I've seen it years. Like I've seen something come in the mail years ago, and I
They
think
give
that
you a
was the
statement,
gist of
yeah.
it. Yeah, I got like a little statement or something, but I never thought to actually go to their website. I'll just be on go mode. That's probably why I
Yeah,
never thought about going
of
there
course.
and
Yeah,
checking. But
yeah.
now I'm definitely going to check. So, all right, you say go to
SSA.gov, make an account.
okay.
And then you can look and see for yourself with your own eyes, how much am I gonna get when I want to pull Social Security? Is it gonna be six
Mm-hmm.
hundred dollars? Is it gonna be 2,000? How much is it gonna be? Or even if you have 40 credits, you would a lot of people are avid entrepreneurs and they didn't work many W-2 jobs in their life,
Right.
and they hadn't paid much into Social Security. So if you don't have 40 credits to be able to pull Social Security, you're able to pay into Social Security and you'll know what that amount is that you have to
Mm.
pay so you can start collecting it
Okay.
and catch up. And then after
Mm-hmm.
you see what you have, the second thing you need to do, and this is like a easy 5-6 step thing. Just write it on a piece
Okay.
of notebook paper. First, SSA.gov. Second,
Mm-hmm.
pick a date they're going to retire. Just pick a date. I'm going to retire at 84. And then we're going to work backwards. Third thing is to pick a date you're going to die, because that's
Mm.
inevitable. How long are you
Whoa.
you feel you're planning on living?
Whoa. She said pick a date. Pick a date that let me see, what were we in 2020 25? Uh ooh. Oh, that's a tough one
Mine
right
is
there,
mine is
y'all.
102. Mine is
That's what I'm
102.
saying. Like I'm trying to calculate over 100 right now. Well, I still got about another I got another 50 to go. Yeah, I got another
Yeah.
52, 53 to go. I'm gonna be kicking. I'm gonna be kicking on the way out of here, y'all. Just let y'all know that now.
Pick the date.
Okay.
Then, fourth, where do you plan to live when you retire? Just you don't have to have it all figured out. Florida, Texas, somebody somewhere sunny state, or if you're going to be in Ohio or in Florida, 6 months and 6 months, you got to pick
Mm-hmm.
something. And then
Pick one.
fifthly, how much money you're going to need when you retire. And so that's a simple calculation, which I can put in the ebook. It's called your survival number. You'll need to know kind
Okay.
of how much you're going to need expense wise when you do retire. So that way, you don't need to be paying for a house note older in your
Mm.
70s. You don't need to be
Right.
paying for a car note in your 70s. Like,
Right.
why are you doing that? Because
Right.
where you really are you going?
Where are you going? 85. I don't know. I might see something. They might come out with that new convertible electric thing. I don't know. I'll be like, man, I got my eyes on that thing. I have to
Well,
go
I'm gonna
grab
have
that.
a '68 Chevelle. That's what I'm gonna have. Stick shift
Okay then.
manual.
All right. That's what I'm talking about. Yeah, so
Yes.
make that date. Make that date as well. Yeah, those are some great things to think about. Those are some things that most of us don't want to think about,
Yeah.
right? Because it's like, okay, we're just living. Most people like when it's my time, it's my time. Nobody's trying to
Yeah.
write the dates down and but
Yes.
it's a I think it's a different perspective, on how to look at things.
And I say all of that because I get the ending of stuff. I have clients pass away unexpectedly, and the husbands or wives are left just stuck in a mess,
Mm,
in a mess. It kind of helps to ease the pain of your loss just by knowing this stuff, because they're already grieving your loss. And then now
for
they have
sure.
to search through documents. Do you have life insurance? Do you have this? Are we going to be on the house, or do we get to keep the house? All of
Right.
that. So, this just helps you tell your loved ones that you really love them and you took care of this for them.
Yeah, you definitely want to have everything things in order because a lot of our generation, a lot of our people, we just don't have things in order. You see the back end of a lot of that stuff. The more you see it, the more you become aware and conscious of what's really going on out here for average people, right?
Right. Yeah, now is the time. A client's husband just passed away on the 31st of January, and I've been doing their taxes for 5, 7 years, and it was just
Mm,
unexpected. So
mm,
just helping her, like, her husband handled the tax stuff, and she was like, well, how do I put this stuff together? And I'm explaining to her how to put it together,
Right.
and she really appreciated, because it was, she still has kids 18 and 16, and she still has to work and survive, and she's like, he didn't really have much together
Mm.
in place in in the event that he died. So
Okay.
it's it's a real thing that people have to deal with every day. Another gem is on your bank account. When you have
Mm-hmm.
an LLC, there aren't beneficiaries on the bank account. On your personal account, always add a beneficiary. On
But not,
LLC
but you,
accounts,
but you can't do it on the
you
LLC.
can't do an LLC. So you have to
Okay.
add the person that you want to be your beneficiary on
Mm-hmm.
that LLC account, because you
Mm.
don't want that money to go back to the bank.
You have to add that.
You have to.
It's not automatically there. So if something happens
It's
to
not
you,
right.
the LLC, that the money going, the bank basically gonna grab that. They're gonna grab that money,
Well,
or
they're
it'll be in
not
probate.
supposed to.
Or how
Yeah,
does it, like, it's
it'll
yeah,
be in
you got to fight
probate.
for it.
You have
This
to
this
fight
this
for
saves
it.
you this saves you from having to fight for it.
Right.
Okay,
And do a transfer on death.
there you go.
There is a form that you could do a transfer on death. You just call your
Okay,
bank and see how they like it. Do they have the form, or do you need to bring it in? Because I believe
okay,
you have to have it notarized. And at the bank there are notaries, and you can notarize that form at the bank.
okay,
And if you
okay,
have a house, you should also do a transfer on death for the house too,
okay.
for your spouse.
Y'all got that. I hope y'all caught that. So I know we got a lot of brand new LLCs getting started. God forbid anything happens to you, and your bank account is swole up and your people can't get to it, and they fighting
Right.
for it. And the
Right.
bank steady try to fight against them. Like, yeah, sorry, there's nothing we can
Nothing
do.
we
Then
can
put
do.
anything, nothing in writing.
Things don't have to be as hard as people
Yeah.
make it seem. You can write a will on your notebook piece of paper and
Mm-hmm.
say what you want to happen, how you want it to happen, and go have it notarized. It can be
Mm-hmm.
as simple as that. And that's a legal document once you have it notarized. Your signature
Okay.
and notarization makes it legal. But I believe I
Mm.
have a blanket will that somebody can just fill in with
Okay.
different stuff, and I can include a link for that too.
Cool beans.
If your startup costs, if you have an LLC and you have your costs are five
Above.
thousand or more, they do amortize that, meaning they
Mm-hmm.
break it up into 5 years. So that 5,000, if it's just 5,000 or less, you can write that off right then and there.
Right.
If
Okay.
it's 5,000 or more, they break it up into 5 years.
I think you gave them some tips, some that they can actually take and start applying to their business. Like for you doing taxes, CPA work, you're not just restricted to your area. You can work like anywhere. Like you can, if someone sends you their information, you can still file their stuff for them, correct?
Absolutely. I can
All right.
file in all 50 states. And I
Okay.
have clients who are international. I have clients who live in Singapore, who are
Okay.
expats, people in Thailand,
Okay.
people in India. I'm able to provide that service for people if that need be. I have
Okay.
clients all over the US.
Okay. So if you guys need a great CPA, someone who knows exactly what they're doing when it comes to doing your taxes, not just doing them, but making sure you're getting the most benefits while running your business, Dr. Janine is available
Well,
for
I
you. She's
appreciate
here
that.
at your service.
I
So,
appreciate that.
um, yeah. So if you guys do need that work, I'll make sure I drop a link in the description box so that you can tap in with her. Your man Big Vic just put you on. I just put you on. I just put you on. So now you don't got to be running out there dealing with people that you know your stuff not gonna come back right. You the IRS knocking at your door after they done did your taxes. You still owe money, and man, listen,
Right.
I done heard some horror stories. So yeah, if you
I
want to
am,
get your stuff done
yes.
officially, she's available. She is available.
I'm in the business of helping people save money on their taxes, like I said in the beginning, and keep more money in their pocket. Like I've practiced
Absolutely.
on myself enough. I've been an entrepreneur since I was in fifth grade. I had a candy business.
Okay then.
And so I've been able to calculate things for a long time, calculate profit margins. Like I used to know in fifth grade if I bought those Jolly Rancher sticks, those long ones,
Mm-hmm.
how much I had to sell it for to make a profit. Like I don't even
Mm.
understand how I was figuring that stuff out, but I knew what my inventory was. I knew
Okay.
how much profit I
I know that's
I
right.
had it all figured out. So
I
I've been
know
doing
that's
it
right.
for a long time. I am a hairstylist by trade, so that's why I'm also able to help cosmetology professionals, professionals,
Okay.
um, really understand their taxes and how to save money. Like I got a lady who contacted me from a podcast that I was on, and she's a hairstylist, and I'm helping her navigate. She owes 52,000 in back tax debt. I'm like, why?
52 G's and
Why?
back taxes. So as a
Yes,
hairstylist?
as a hairstylist.
Mm.
So her old tax person. Now, like I said, there's two ways to skin a cat. Most tax people aren't like artists, so I happen to be both the artist,
Mm.
hairstylist, and a CPA. So I understand the artist's brain and how we think
Right.
and how entrepreneurs think. Tax professionals, they're kind of in a box. They think inside the box. I think
Mm-hmm.
outside the box. They don't know all the deductions that are available to most people.
Do you think that's because they're more so doing it for individuals versus someone that's
Hmm.
running a business?
Yes, they're just there for
Kind of
individuals,
like you said,
and that's
they're
okay.
kind of more narrow-minded.
Yeah, that's okay. That's their market. That's, they may know how to do a Schedule C, but
Okay.
to really maximize and save somebody some money, it really takes some um, expertise.
I appreciate you coming on this episode to drop a few gems and just open people's minds of the scope of running their business tax wise. But I think they should be able to take this video. If not nothing else, you're definitely well more educated on what you can write off and how to keep as much
Right?
money in your pocket as possible. Because at the end of the day, that's what it's about. Like some people say, at
Yes.
the end of the day got to end.
I like that one.
For sure.
I'll run
Yeah. So
down real quick too.
okay.
Real quick, like the things that you can write off. Your marketing, your advertising, you can write off if you paid somebody to help you do something, that's contract labor. You can write
Okay.
off your renter's insurance, house insurance. You can write off your tax preparation. You can write off your internet, your
Mm-hmm.
Wi-Fi. You can
Mm-hmm.
write off all your office expenses, pens, paper, postage, water.
Equipment.
If you do the equipment, if you do the 5 gallon jugs of water, you can write off all your supplies it takes you to run your business, every last single thing.
Okay.
You can write off any repairs and maintenance. If you have regular maintenance like car washes or um, whatever car wise that you get maintenance
Mm-hmm.
wise, write that off.
Mm-hmm.
You can write off the travel. You can write off the meals. You can write off your cell phone bill, any assets that you purchase for your business. If you purchase the app, iPad, iPhone,
Mm-hmm.
printer, computer, laptop, even if you have never written it off before, say you just started your LLC and you bought that
Mm-hmm.
stuff in 1980 and you're using it for
Mm-hmm.
your business now, you can write off the
Time to
full
write it off.
amount. Time to
Time
write
to
it
write
off.
it off. Okay.
Doesn't matter if you have a TV in your truck and you bought that in 2000, you still write that
Mm.
off, the full value, because you're
Mm.
using it for your business purposes.
For sure. For
And
sure.
any
So
charitable contributions that you do,
it's a write off.
any charities that you give to, it's a write off.
Okay.
So
Okay. So
that's
for
just
example,
the name.
I drove I drove my electric vehicle to train someone in Connecticut. Hotels, well, electric. I didn't really put gas in there, but electric. I
Mm-hmm.
used that vehicle for business purposes.
Mm-hmm.
So that entire trip is a write off.
Right off.
It's a beautiful
Right off.
thing. It's a beautiful thing.
Beautiful thing. Yes.
It's a wonderful thing. You guys just heard it from Dr. Janine Jennings herself. Do you have the textbook? Is that on Amazon as well?
Yes, it is. It is called the Small Business Growth Guide book.
There you
I
go.
have some other co-authors with that, but I will
Okay.
include that link as well.
All right. So we're going to drop that link in there as well so you guys can grab the book. Thank you so much for coming on. I appreciate you.
Thank you for having me. I appreciate you too.
Absolutely. All the links will be down in the description box. You already know what it is. It's the homie Big Vic TV. Always hustle, never stop growing. Until the next video, let's go. Let's get it. Let's
Let's
eat, baby.
eat.